Welcome to Option Pit, everybody. And to get the week started, a request to my friend Giovanni. All right, how can you not get excited about visiting Option Pit first thing in the morning? Hello, everybody. Welcome to Option Pit. This is Andrew Giovinazzi, Chief Operating Officer of said firm. What do we got going? You know what we got going? We got Apple. I mean, you got to be realistic. It's Apple earnings. Does anybody care about anything else? No, it almost feels like they leaked them. And Apple is, I believe, are we making it, I believe, an all-time high prior to earnings? We are. Let's go back a little farther. I can't imagine. Oh, almost. Almost. So market expecting great things from Apple. Also, all the flyers, right? Tesla, we got a little position on a strategy letter. Tesla should be doing okay today. LinkedIn up some. Let's see, is Facebook finally getting out of the basement? Facebook's even up, $1.50. What else? Apple, Amazon's up another 90 cents after ripping. So all I'm going to say is the NASDAQ tech rally, I lived through the last tech rally. I lived through that dot-com era and well before, several manias. This mania, though, NASDAQ is actually fairly healthy. I'm not going to say it's cheap, but it's not the 45 or 50 PE that it was the last time. Most stocks in the NASDAQ in the top now, Apple, Microsoft, Cisco, Oracle, all pay dividends yielding around 3%, something like that. Just a different market as the internet age has basically caught up. All the demand for the internet is pushing all those old line companies that all service the internet one way or another. Microsoft does backbone internet infrastructure. Obviously, Apple is connected by devices, Cisco infrastructure, Google, basically anything internet, and they are all growing. What are you going to say, right? The more the EU tries to hate them, the more they are going to grow. So what are we looking for today? Just a couple of things to keep on your radar. Right? Google here, a little blog we had, way outperformed the Siren Butterfly we looked at on Thursday. Way outperformed. Okay, nice one there. What I wanted to hit was economic calendar. So this is really for volatility. We got the Fed announcement on Wednesday. All the data has been back and forth. So are they gonna change? Are they gonna upgrade? No, I got somebody else. David, I'll have to let you know in a second. Hold on here. So what's going to happen with vol? Well, this is a pretty normal. So we had around $2.25 in vol premium on Friday. You have normal weekend effect. VIX is up a little bit today. It's up 16 cents. Not a lot for a weekend effect. So basically, the futures are having a hard time leaving the 15 handle at this point. And I don't expect it to leave the 15 handle until Wednesday. Again, we'll look at, just like we did last week, we looked at some time spreads, some plays for both VIX and the indexes that look like they're going to work in this type of market. I think we got to have kind of a floater market. Things still seem to be rosy. Earnings have been better than everybody's expected. So trades that kind of play on the fact that we're going to float around, selling some near the money premium, but just don't get short a lot of Vega here at this level. I think we're going to see more of that. So if basically the next leg of the rally in the NASDAQ will be decided on how great the Apple earnings are. If they're great, we're going to move higher. So maybe we can look at some possible upside explosion positions in the NASDAQ today in our chat room. right? Because we might see some new levels that we haven't seen before. Let's just see if we can find positions that are cheap enough to make it worthwhile. All righty. All right, everybody. I think that's what we got. I would say the only cloud on the horizon is still the Greek government will not. They keep putting off the inevitable. I don't know how. It feels like the market is pricing that to some degree. I think that's why we have the term structure that we have here. And the question is just how that's all going to play out for us. That's, I guess, the real simple answer, how it plays out, and how the EU, can handle all that. If they do leave, which will be sad for them, volatility will rise. Okay, I don't think there's a whole lot of question, because you're going to just inject a massive amount of uncertainty, and maybe some downside explosion positions through May, June might be worth something. We can take a look at those as well. So, just trying to see if you can get basically cheap positions that give you a chance to win down the road. So we've got a lot of good feelings, a lot of happiness. We got higher levels for the indexes, higher levels for the NASDAQ. Okay, but underneath the surface, an interest rate rise or the Greeks kind of doing something strange that would be the only monkey wrench I really see at this point. So, all right, everybody, I'll see you all in the chat, and you all have a good day.